What if I told you all those rent payments that you've been making, the ones that feel like you're just throwing money away every single month, they might actually be the key to owning your own home? Yeah, you heard that right. Your rental history, those years of never missing a payment, of being responsible as far as being a tenant, that's worth something real. And today I'm going to show you exactly how to turn your track record as a renter into the foundation of getting a mortgage. What most people don't know is that lenders are starting to look at rent payments the same way that they look at credit card bills, car loans, and student loan debt. It's all proving that you can handle monthly payments. So stick around because by the time you get to the end of this video, you'll know exactly how to make your rental history work for you. Welcome to those of you that are new here. I'm Sabria Callis, your partner in finding and funding your new home, helping renters and first-time home buyers turn their dream of home ownership into reality. Let me tell you about Marion. 3 years ago, Marion was exactly where maybe you are right now. She was working, she was 32 years old as a teacher and renting a one-bedroom apartment in Houston for $1,100 a month. Marion was great with money. She never missed a rent payment, not once in 5 years. She didn't have any credit card debt. She had decent credit score around 680. But when she went to talk to a mortgage lender about buying a townhome, they looked at her file and they said her credit history was thin. See, Marion didn't have a car loan. She paid off her student loan years ago. She barely used any credit cards because she preferred her debit card. On paper, to traditional lenders, she looked risky, not because she had bad credit or she was bad with money, but because she didn't have enough recent credit accounts to prove she was good with managing it. But here's where Mary's story gets interesting. Marion's realtor told her about something called rent reporting and alternative credit scoring. So within 6 months, Marion was approved for a mortgage. Today, she owns a two-bedroom townhome, and her monthly mortgage payment is actually $200 less than her old rent. So how did she do it? Let's break it down. The frustrating thing about the traditional lending system is that you can pay $1,500 a month every month, like clockwork for years, but it doesn't show up on most credit reports. Meanwhile, if you forgot to cancel that $47 Netflix subscription, it can go into collections and it can tank your credit score. Think about that. Now, according to research, about 45 million Americans rent their homes. That's roughly 1 in 3 households. And many of these renters, they pay their rent on time, every time, building up years of proof that they can actually handle big monthly payments. But most traditional credit scoring models, they're never going to see it there. They're looking at credit cards, auto loans, personal loans, things that involve borrowing money, not just paying for housing. And this creates a catch 22 because you can't get a mortgage because you don't have enough credit history, but you've been successfully making rent payments that are usually often more than a mortgage would cost. Now, it doesn't make sense, right? Well, guess what? That's changing, and that's what we're here to talk about. Okay, y'all know I like to talk solutions. There are actually several ways your rental history can help you get a mortgage, and I'm going to walk you through each one of them. Method one is rent reporting services. There are now services that will report your rent payments to the major credit bureaus, Experian, Equifax, and TransUnion. Companies like Rental Karma that I recommend to my clients, and I'll link that below for you. There's Level Credit, Credit Boost. They work with renters to get their payment histories added to their credit reports. Now, here's how it generally works. You sign up, verify your rental history with bank statements or landlord confirmation, and they report your payments. Some of these services can even report up to 2 years of past rent payments, which is huge. The impact, according to experience data, renters who add their rental history to their credit reports see an average credit score increase, check this out, of 29 points. For some people with limited credit history, that boost can even be large as 60 points or more. Now, full transparency, these services usually charge a fee anywhere from $5 to $15 a month, or sometimes a one-time fee. You'll want to make sure that the services reports to all three. major credit bureaus, and check on reviews before signing up. Method number two is alternative credit data. Now, some mortgage programs, especially FHA loans, they do allow what's called alternative credit references. This means if you don't have traditional credit, you can use rent payments, utility bills, insurance payments, and even phone bills to demonstrate your credit worthiness. Now, to use this method, you're going to need 12 to 24 months of canceled rent checks or bank statements showing those rent payments. You're going to also need a letter from your landlord verifying your payment history and that you were never late. Third thing you may need is documentation that the payments were for the full amount owed. This takes a little bit of legwork, but it costs nothing except your time. Let's talk about specific mortgage programs that are renter friendly. FHA loans, first one, they are backed by the Federal Housing Administration, and they're designed specifically for first time buyers and people with lower credit scores. The minimum credit score can be as low as 580 for a 3.5% down payment, or even 500 with a 10% down payment. And FHA underwriters, they will consider non-traditional credit references, including your rental history. They want to see 12 months of on-time rent payments. There's Fannie Mae's Home Ready program. This program is specifically designed for low to moderate income buyers. One of its features is that it considers positive rent payment history as part of the approval process. You only need a 620 credit score and as little as 3% down. Then there's the VA loans. For veterans and active military, VA loans already tend to be very flexible, but they also allow alternative credit documentation, including rental history. Then there's your local programs, your credit unions. Don't sleep on these local programs, okay? Many states and cities, they have first-time homebuyer programs that allow for flexible and alternative solutions. Their credit unions, they are more holistic. They will look at your whole financial history. They'll look at some of those alternative solutions rather than the big, larger banks. Y'all remember Marion? Here's what she actually did. First, she signed up for a rent reporting service and she got her past 2 years of rent payments added to her credit report. This bumped her score from 680 to 715. Not a huge jump, but enough to open more doors. Second, she gathered evidence. She got 24 months of bank statements showing her rent payments, collected proof of utility payments, and she even asked her landlord a letter confirming that she had never been late. Third, she worked with a mortgage broker who specialized in first time home buyers. Okay, this is key. Not all loan officers are equally knowledgeable about these alternative options. Her broker helped her apply for an FHA loan and knew exactly how to present her rental history. 4 months later, Marion closed on her townhome. Her mortgage broker later told her that her documented rental history was actually the strongest part of the application. It showed stability and responsibility. Now, today, Mary is building equity instead of paying someone else's mortgage. And it all started with recognizing that her rent payments were valuable. All right, what should you be doing right now? Here's your action plan. Step one, get your rental documentation in order. Okay. Starting today, keep meticulous records. Save every rent receipt, every bank statement showing rent payments, every communication with your landlord. Take photos of checks, money orders before you send them out. Set up automatic rent payments if possible, if you have a digital trail. Consider rent reporting if you're 6 to 12 months away from wanting to buy. Sign up for one of the rent reporting services now. Research which one reports to all three credit bureaus and have good reviews. Yes, it's going to cost you a few dollars, but think of it as an investment in your future home. Step three, check your credit report. Go to annualcreditreport.com, pull your free credit reports. See where you stand right now. If you have any errors, dispute them. If you have a thin credit file, start building it strategically, maybe a secure credit card that you can pay off monthly. And then on step four, I want you to find the right lender. Not all lenders are created equal. You want someone who understands alternative credit documentation. As specifically, do you work with FHA loans and alternative credit references? talk to credit unions, get recommendations from your first time home buyer programs in your area. And lastly, I want you to start saving for a down payment. While you're building your credit file profile, start putting money aside. Many programs, they only require 3 to 3.5% down on a $250,000 home. That's 7,500 to 8,750. Create a dedicated savings account to automatically transfer it to it every month. If you start today, you could realistically begin to apply for a mortgage in 6 to 12 months. That's it. 1 year from now, you could be a homeowner. Look, I know the path to home ownership can feel impossible, especially when rent keeps eating up most of your paycheck, but you're not starting from zero. Every rent payment that you've made is proof that your responsibility, your stability, and your ability to handle a major monthly obligation. The system is starting to recognize that, and these tools do exist. These programs exist. You just needed to know about them and take advantage of them. Well, guess what? It does take effort. You're going to need to be organized. You're going to need to be persistent, but it's possible. Marion did it. Thousands of other people do it every year, and you can too. So stop thinking of rent as money being thrown away. Start thinking about it as a track record. It's your proof that you're ready for the next step. Listen, if you found this video to be helpful, hit the like button, subscribe for some more real world home ownership advice. Drop a comment below. Let me know. Are you currently renting and hoping to buy? What's your biggest obstacle? I read every comment and I love to hear your story. And remember, your rent receipt is worth something. It's time that you make it count. So thanks for watching, and I'll see you on the next video. Bye now.